Journal production exercise. So I'll give you 30 seconds and for each question, and then I'll give you the answer. So question 1. A company purchased a van for £10,000 from its bank account. The financial transaction is, what are the debits and credits? Okay, so the answer to this is C. And the reason why it's C, in terms of we bought a van from a bank account. So the van is a money in item because it makes us money in the future. So money in item. And the bank account is cash now, so that's a money in item as well. The van is a money in item going up, so that's going to be debit van. And the bank is a money in item going down, so that's going to be credit bank. So that answer is C. Question 2. A shareholder provides £10,000 to the company, which is put in the bank account. The financial transaction is, what are the debits and credits? Okay, the answer is B to this one. And the reason why the answer is B is because the shareholder is a money out item. They're going to want the money out in the future. So an increase in a money out item is a credit. So credit 10,000 to the share capital. And the bank account is cash now, which is a money in item, and that's going up. So that's debit the bank item. So the answer to here is B. Debit bank £10,000, credit shareholder capital £10,000. Question 3. A company buys some goods for resale, purchases, on credit from a supplier for £1,500. What is the transaction? In this question, you should choose 2. So what are the debits and what are the credits? Okay, so the purchases are expenses, and this is money which will be going, which we won't be paying to the shareholders' capital. So shareholders is a money out item, money that we won't be paying to them, a reduction. So a reduction in the money out item is debit purchases. So that will be the first one, debit purchases. And then the supplier, we're going to pay them in future. Okay, so that is going to be a payment to the supplier in future. It is increasing, so it's an increase in a money out item, so that's going to be credit trade payables. And it's not because this is stock here, it is because this is money that was owed out to another company in the future, so that is going to be D there. So it is debit purchases because it's an expense that we reduction from the amounts that we owe to shareholders, and it will be credit trade payables because it's an amount that we owe to a company that we're going to pay out in the future. Question 4. Another word for the amounts that we're owed from a customer is, so choose two different options here of what might be the term for the amounts that we are owed from a customer. And the answer in terms of 2 accounts, it could be trade receivables here, it could be customer accounts, and it could also be trade debtors as well. That's one in the good old days we used to have them. We used to call them trade debtors. Question 5. Our company sells a product for £10,000. It's selling a product for £10,000. The customer pays in cash that goes straight into the bank account. The financial transaction is, what are the debits and credits? Okay, the answer to this one is D, because we pay the money straight into the bank account, and the bank account is an increase, is a money in item. An increase in a money in item would be a debit. So debit bank £10,000. The sale of the product, the shareholders will ultimately want those sales back. In terms they'll want to be paid that money. That's what they own the company. That's what they're going to want. So an increase, the shareholders are a money out item. An increase in the money out item is a credit. So it's going to be debit bank £10,000 and credit sales, which ultimately will go to the shareholders. So credit sales £10,000. So the answer is D. Question 6. A company owns £10,000 in rent but has not paid it yet. So it's not paid this amount yet and it owes £10,000 in rent. It needs to owe £10,000 for rent. It's received the invoice. The financial transaction is, pick two of these. Which are the debits and which are the credits? And so the answer is A for one of them. Debit rent. Rent is an expense. Yeah, and expenses are affect shareholder capital. It's money that the shareholders can't get in the future. So a reduction in their shareholder capital, a reduction in the money out item is a debit. So debit expense, because it represents less that we have to pay to the shareholders. And then because we haven't paid it yet, it won't be affecting the bank account because we've not paid it yet. It will be credit trade payables, a money out item that's going to go out in the future. An increase in that money out item paid in future to the landlord is going to be a credit, so it'll be credit trade payables. So that's the end of the task. And what we can see is you scored all 9 out of 9. Well done. Thanks for listening. Bye bye.